closed my trades, left me for dead. But then a light shine from Wall Street bets. Buy GME, brother, don't sell yet. Hold the line. Diamond hands. We ain't leaving. That's the plan. Citadel sweating, Kenny's losing his mind. He's shorting the truth, but the tendies are divine. Options expiring, gamma squeezing the room, and my stock's rising up like it's a financial boom. Lure, I put my faith in GME. Lure and AMC delivered me. Lure from debt and fear and margin calls. Lure to diamond hands and YOLO walls. Lure to the moon. We ride, we fly, we ain't immune from faith and stokes and rocket fuel. Lure, we bless this trade in the Reddit school. Lure 1 share, 2 share, 5 in my bag. Game, stop preaching like an American flag. Hey, Citadel crying, hedges in doom, while retail sings in full costume. To the mall, yes we go, with memes and dreams and gamma flow. They tried to short, they tried to shake, but our conviction just won't break. Yes, we go, with memes and dreams and gamma flow. They tried to short, they tried to shake, but our conviction just won't break.
Afternoon, Outliers. Welcome back to OVTLYR University. Oh, how are you doing, gentlemen?
Good.
Oh, great.
All right. Well, of course, we got to roll the intro, and then we're going to get busy.
Are you ready? Let's go!
Respect is earned. Respect is never given.
All right. So we are in lesson 9 already this week. Let me ask you guys. We've gone through a lot, but we still haven't got to this is how you buy, this is how you sell. Am I going too slow? Am I going too deep in different areas? Should I be going faster? You tell me. I'd like to hear back from you, but you need to raise your hand first if you don't mind. Go ahead, Mike.
I think it's a good pace. I mean, plus we have the back end to ask questions along with each other, but I don't think there's anything like you're blowing through it without us saying something along the way where you say, hey, can you go over that again? So
yeah. Well, I mean, there's so many people on the YouTube who'll come on and they'll be like, oh, this is how you got this 10-minute video will teach you everything you need to know about trading, right? We've all seen those many times over. And of course, that strategy could potentially be the most profitable strategy of all time in the history of mankind. But if you don't understand the mechanics of it, if you don't understand the back end of it, right, it would be akin to handing a laptop to a 10-year-old and saying, okay, now here's your laptop, go ahead and take it apart and build me new laptops. And it's like, well, I don't understand. What do you mean? Like this is a laptop, you're right, but I don't know what goes inside of it. So I'm really trying to make sure that we understand and grasp the whole concept before we get to that. And by the way, it's not even a masterclass. It's free here on YouTube. What's up, Joe?
Well, to build on what you were just saying, though, we also learned in a previous lesson how important the emotional tie is to the plan, right? If you can't bring yourself to follow your own plan, it's not really that great of a plan anyway.
Exactly right. Larry Height said that to me. He said, if you cannot follow the plan that you made, might as well just throw it out the window. There is no point in having a plan that you cannot follow that you made. Yeah, for sure. All right, gentlemen, I appreciate you all being here for class today. Let's go ahead and get busy. So let me share my screen. And we'll do this. Welcome to OVTLYR University. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, including Larry Hite, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And we have a full money-back guarantee on OVTLYR University. If I can't make you profitable, then you get a 100% refund. Considering that it's free, I think this is probably the best deal on the internet. So this is lesson 9, building your trading plan. Now, the homework review from last week, we got the trading plans. You guys sent me the Discord DM, so we're good over there, and we'll be reviewing those in just a little bit. But before we get to that point, right, what do you think must go into a trading plan? Right, what are the absolute minimum you got to talk about this kind of things that have to go into a trading plan? Mike, go ahead.
When you're going to get out?
When you're going to get out?
Yeah, before you put a trade on. Just, yeah, because I can't, you've said it a million times, and I've heard it a million times where people are like, hey, Chris, I'm in this trade already. And you're like, so when are you going to get out? Anyway, so yeah, that's a key thing, I think. Got to know when to get out.
And I tell people all the time, just having a plan is what separates the best from the rest, right? And when someone asks me, hey, Chris, what should I do with this trade? My very first response to that point is, well, what was your plan? Are you just going to get in without knowing where you're going to get out? Like it's like changing the oil on your car, right? You get under there and you start like wrenching on stuff and you're like, I don't really know what I'm doing down here, but I'm wrenching the shit out of this car. Right? Like, what are you doing? Right? I just had to get the oil change for my wife's car yesterday. God, what a pain it is to get oil changes. Driving a Tesla is so much better. Ian, what's on your mind?
I just unmute. Yeah, and following off of Mikey's thing, to have your risk management, depending on how good the trade is and how it sets up, just part of that.
What would you consider risk management there, Ian?
Just your percentages. Yeah, just how much you're willing to risk on a trade, starting small and scaling up as you get more comfortable. Like you've done, you've gone up to 7%, but that's crazy. For me, that's crazy.
But see, I'm confident at 7%. Like I know my numbers. My worst case numbers are that I'm still profitable. So even if I lose, I'm okay with that because it's just one in a series of trades.
Yeah, and you've already forgotten more than I've learned. So
right. So okay, who else wants to tell me something that they would absolutely must have in their position or in their trading plan?
Actually, Mark in the chat had a really good one. It was position size, and I'm 100% on that. Making sure the position size is right.
Very good. Stocky Locky had a good one too. Risk, entry, and exit. What about Paul? Paul, what would you put as a number one must-have in your trading plan?
So I'm reading the book by Tom Hugard, Best Loser Wins. And it's all about being able to control your emotion and perception, and it keeps people from trading their plan. So it's a form of risk control.
So you're saying people have a plan, but then when they get emotional, they stop trading the plan?
Right. They become human.
We can't do that. If we want to be successful, we can't do that. Oh, this is great. Let's go to the next slide. So what do you think are some optional things to go into your trading plan? Okay, optional, meaning like, I know where I'm going to get in, I know where I'm going to get out, and I know what my risk percentages are. What are some optional things you might include in your trading plan? Go ahead, Mike.
Time of day that you trade, maybe.
That's a really good one. That lifestyle aspect of it, really good. I didn't even think of that one. Outstanding. Deep thought.
I was going to say the same thing as Mark. Yeah, time of day you trade, whether you trade into big news events like earnings, things like that.
Yeah. Would you guys put in anything like Skinny Buff Guys talking about here? What's the PE ratio? What's the business backstory? the fundamentals. What do you think? Would you put any of these things in? I'm curious. Maybe you do.
Nope.
Dave, after you, my friend.
I'll throw in there. I do on certain ones. Optional to me would be small cap, mid cap, large cap. What am I looking at here? What's the horsepower behind it? I like news. I know you don't like news as much. I like news because if we have movement, I want to know why. Only because, is this just hype on Wall Street bets? Is it about to fall off the other edge? Or is this a $1 billion contract from the government coming through? I like to know a little bit of the backstory. So, to me, those are kind of the extra optional things just beyond the price action. Why are we going where we're going right now?
That makes sense. And what's great about that is everybody's going to have their own trading plan, right? I share mine all over the place all the time. And I'm making tons of money with it. You guys are probably making tons of money with it. But there's lots of other ways to make money in the market, right? This is not the only way. It's just what works for me and my personality and what I've developed over years. Yeah. Joe, what's on your mind?
Well, we know there's a plethora of indicators out there in trade vision, and I would say they're all optional. And during back testing, I went back and I looked at some that aren't part of the golden ticket trading strategy, which we'll talk about later. But so I'd say they're out there. You can choose to use them if you want. So they're optional.
Very good. Well said. I like it. All right. So your trading plan must have the following. Right, where you're going to get in, right, where and why you're going to get in. Number 2, how much you're going to get in with. And number 3, where you're going to get out if you're right or you're wrong. Right, at the end of the day, boiling it down to just 3 different things. Where are you going to get in, how much you're going to get in with, and where you're going to get out. Everything else are the details that support this, right? It's kind of like if we talk about football, right? In football, American football, the objective is move ball to end zone, kick ball through goalposts. That's it. That is legitimately all of it. Same thing here, right? Move ball to end zone, kick ball through goalposts is exactly where you're going to get in, where you're going to get in with, where you're going to get out if you're right. Now, all the details are going to help you move the ball down the field or kick the goal through the goalposts. And that is what we're going to be discussing here, is filling in the details amongst those 3 aspects here. So those are the core foundations of your trading plan, but now we got to fill in those details. So OVTLYR 9 gives us a huge advantage on this, right? Because with OVTLYR 9, we're looking at the market, we're looking at the sector, and we're looking at the stock, right? And of course, this is a pitch for OVTLYR, a soft pitch, but you've got to make sure that you're looking from the top down, right? If the market is bullish, and the sector is bullish, and you decide you think you know better than everybody out there, and you're going to start shorting the mess out of this stock, you're going to get run over. 40% of a stock's move is due to the market. 30% stock's move is due to the sector, and only the last 30% is due to the stock itself. So if you're working against the market, if you're working against the sector, and you're buying the mess out of a stock while the market is crashing, you're toast. So that's why I always like to start with the market and work our way down. By doing so, we're going to be in sync with what's going on out there. So that makes it really easy. And the OVTLYR 9 makes it a super simple step-by-step process. So I'm going to go through my trading plan, and you're going to see all the little details. And of course, you guys have seen this before, but we're going to go through all the little details of it right now. So with the OVTLYR 9, I look at the trend of the market, the signal of the market, and the breadth of the market. So first, the trend is what we talk about all the time, the 10 over 20, price over 50. We talked about trend following for ages. So now let's apply that to the market. On the S&P 500, we want to see the 10-period EMA over the 20-period EMA with price over the 50-period EMA if we're bullish, and the opposite if we're bearish. Now, couple notes down here, those little tiny details. If the market closes under the 20 EMA, I wait to put on new trades until it's back over the 10 EMA. Now, the reason that I do that is it helps get out of the way of choppy markets, and it lets us know that maybe not everything is so great. So, for example, you see it trending higher, the 10s over the 20, prices over the 50, but this close under the 20 right here, that's a big warning sign to me. So I'm not interested in trading again until it closes back over the 10, which it did the next day. But what could have also happened, right? A close under the 20 EMA on the market, well, not even on the stock. And then what happened? Down she goes, right? Either one of these things could have happened. It could have gone up or it could have gone down. But either way, I'm letting the market tell me which direction it's going. Right here, continue back up. Right here, continue down. So that would be the trend of the market. Next is a signal. A signal is super easy. It's either buy or sell inside of Outlier, right? This is on my favorites. So I can literally pull up my phone at 5 in the morning, click the star button on the watch list, and see within a moment's notice if it has a buy or sell. And if you enable notifications, you'll get an email as well. It makes it super easy. Then the breadth of the market is the last thing that I look at. Now, on the breadth, I have actually a bit of detail on this one. So first, I like to trade in the direction of the 10 EMA crossover. So on the breadth, let's go to breadth real quick. I like to see the full stocks. You can look at the individual sectors or S&P or whatever, but I like the full stocks for when I'm looking at the market. That's 2,600 stocks. And then I zoom over here and I look for this crossover. Now, the green line represents how many buy or sell signals we have as a percentage. So down here, we had 1% buy signals. So 99% sell signals. Up here, we had 80% buy signals. So 20% sell signals. And that it goes back and forth over and over and over and over again. And as of right now, this has a bullish crossover on the 10 EMA. Okay. We've talked about trend trading many times, and the 10 EMA is a great way to keep on the right side of the short-term trend. So we can see here a bullish crossover. So looking at this, we have bullish trend and bullish breadth. And I know Deep Thought sent me a cool new spreadsheet or a cool new gadget, but I haven't got to it yet. And then the signal right here is this. I'm sorry, those should be green, shouldn't they? The signal should be green. Oh, the signal should be red. I'm talking out my backside right now. All right. That's what it's supposed to look like. So for me, this already disqualifies anything for me. I want to see all Outlier 9 lit up before I'm going anywhere. So the next step in my trading plan is to look at the fear and greed and the breadth. But how do we get to this point here? How do we get to this point here? We can just pick any stock at random, but I want it to be a little bit easier on me, right? So the next thing that I would do is go to the screener. So on the screener, I put in my screener information. So we go to the screener. And this is my screener information already plugged in. Let me reset my screener. Actually, that should do it. It had what I put in last time. So I have all the sectors, all the industries with a positive return on Outlier. So the Outlier buy and sell signals, I want to see a positive return. Capital efficiency, I don't use, but you can. I mean, we see some huge numbers on here, but it's not something I use. 30-day average volume, I like lots of volume. I need liquidity. So greater than 1 million with a buy signal if I'm going long. Price change, I leave this wide open. Market cap, I leave it wide open. I'm a snob, so I trade only $20 stocks or greater. And then the fear and greed heat map value, I go from 0 to 90, meaning I want all the fear and I want most of the greed, but not the very tippy top of the greed. I want to see the fear and greed heat map getting more greedy from any position, just as long as it's getting more greedy. And on the overlay, the uptrend indicator shows the 10 over 20 price over 50. So now that I have that, I've narrowed it down using this. Now we'll take it a step further and let's click on one of them. So let's go to Citizens Financial Group. So now that I've found a stock that I want to look at, let's look at it a little bit deeper. So let's drop you guys off so we can see it better. So the first thing I want to see is the fear and greed and the breadth for the sector. Looking at this, we can see the breadth is bullish. We do have that crossover right here. Let me zoom in a little bit on this. We do have the crossover on breadth, and the fear and greed is actually continuing down. The fear and greed on the sector is continuing down. So this would be green because I can tell that the crossover has happened right there on the same screen as everything else I want to see. But we don't have fear and greed moving in our direction. It's still moving down. So this would be red. Okay. So earlier we looked at the market. Now we're looking at the sector. Okay. So we've identified 70% of the move so far. So next, I go into the stock and look at it on a deeper level. So even though this one doesn't pull through, I'm going to look at it on a deeper level, just as an example. It has a buy signal. It has the green overlay, meaning it's in an uptrend, and the fear and greed heat map value bottomed and is starting to move up. Just slightly, but it is starting to move up. So if we go to, let's copy this one down. I see the trend, signal, and fear and greed are all moving in the direction that I want to see. And all that's left to do is look for outlier blocks. Now, one other bit of details that I put into here, right? So even though this is the outlier 9, there's additional details that I look for. I don't want to trade up into earnings. I don't want to trade up into earnings. I don't want any outlier blocks in my way. I generally give it 2% or more. And then I do not want to see it above the prior day's low. Any one of these things will disqualify it for me. So let's go look at this chart of CFG. And let's go to today. Okay, so first we see it's an outlier block right here. Not going to trade it. Will not trade it, because this would be an area of resistance. This could be an area that can prove difficult to get through. So even though it has a bullish one down below it, it has a double stack order block on top that would be considered a lot of resistance. And so Chris wouldn't be interested in that. And that's okay. I would just move on to the next one, right? So if this goes red, I would just move that on to the next one. No big deal. And as you're going through your stocks, you're going to be eliminating them. The objective here is like a funnel, right? You start with the market and you're chopping them down, chopping them down, chopping them down. And only the best stocks that fit your trading plan are going to fall out the bottom. Everything else is just noise. Don't even worry about it, right? If people are talking about it on the internet, let them talk about it. Let them do it. If it doesn't fit your trading plan, it doesn't matter. So we looked at the charts. Now, let's say, for example, that it did fit my criteria. I would look through here, right? So if there's more than one, I start with the highest back test and work my way down. The back tests are super simple because right here in the screener, it does the back testing for you on the signal return here. So let's say I had a handful of them, and this one's really high. HIMS, which got a buy signal, has 939.59% historical return. So I would start there. I would start on HIMS. Then I would this one I could actually take off because it's now included up higher in the outlier 9. Look at that. I could make a little trading plan change. And that's okay, right? The more you trade, the more you're going to come across circumstances to add to your trading plan to refine it better for you. Then I'll start at 21 days until expiration on the options. I'll make sure it's around 250 open interest or more, less than 50 cents between the bid and ask spread, 20% or less on the extrinsic value, and that generally puts me in the 80 delta. But if any of this comes through and there's a problem, or if any of this doesn't fit my trading plan, I move on. I am so strict on my trading plan. The only thing I'll fudge is open interest. That's about it. If it's a 231, I'm okay with that. If it's 1,000, great. Maybe extrinsic value. If extrinsic value comes in at like 25% and it has plenty of open interest, I can fudge that a little bit. But I'm super strict on this. I want to make sure that it fits my trading plan. Then, after I've found the option that I want to trade, I need to know how many of those options I'm going to buy, right? As we know, we have a position sizing spreadsheet that does all this for you, but this is the math behind it. You take your account balance, multiply by your risk, divide it by 2 ATR, gives you the number of shares. I'm always coming in around the 80 delta, so I just leave it at 80, and that gives me 20 option contracts. Now, we've talked about this position sizing formula in the past. This has saved me on so many occasions, and it's helped me on so many occasions because I use 7% as my risk. I can trade really big, but I trade really big with a really tight stop. That half ATR stop is really close on purpose because we talked about this last week. A winning racehorse does not back up into the gate. If it's going to work, it's going to work. If it's not going to work, you'll find out very quickly and you can move on. Paul, what's on your mind?
Will you will you trade or move down your 1/2 ATR if you're trading smaller percentage? Give it more room to move, or do you stick at 1/2?
I see what you're saying. So trading a smaller size, but giving it more of a stop loss to find out. Is that what you mean?
Right.
It's up to you. I wouldn't personally. Not at all personally. Joe, what's on your mind?
Can you go to slide 26 on the fourth bubble? It says above prior low. I thought I heard you say you wouldn't want it to be above the prior low.
Oh, hang on. Maybe
you
that's
do, right?
It should be above the prior high or below the prior low, above the prior high. So this is if I'm going short versus going long. Just a little typo there. Above the prior high, meaning like let's go to a chart on that. Right. If I were looking at this stock and currently looking at it, it would be somewhere down here. No way. I wouldn't touch that. Would not touch that whatsoever because it's below the prior day's low. Right. Below the prior day's low. Now, let's say I'm going short the stock. Here. On this side. All right. Let's say I go short right here. And then the very next day, it gaps up like this. Or maybe I'm looking at this and it's like, wait a second. This is way above the prior day's high. Way above it. In fact, I would bet the trend might be changing the other direction just on that candle. So if you started short right here, you could be in a whole heap and helping full of trouble. Let's go to Tesla. Tesla's had some crazy moves lately, right? If you're shorting Tesla and it's way up here, this is not the opportunity to start shorting. No way, Jose, not the opportunity to start shorting. Or if it's down here, this is not the opportunity to go long because it's well below the prior day's low. Does that mean the trend has reversed and it's going to crash down or crash up? Not necessarily, but it doesn't put you on the right side. Okay. So for example, when it moves like this, there should not be an instance where it closes below the prior day's low. This one right here was a red light. Okay. This one closed below, actually, no, this one closed below the prior day's low. This huge move up sideways, a close below the prior day's low. So some people would look at this and be like, I don't care. Other people who know how to read the market will look at this and say, that doesn't look right. A close below the prior day's low is not a good place to be. And what happened a few days later? Boom. Doesn't always happen like that, but that is a red light that you've got to pay attention to. Even when it's in a beautiful, strong trend, close below the prior day's low is not what you want to see. Great question, Joe. So I have, JC, go ahead.
Slide 27, please.
You got it.
When it's right to the right of option chain liquidity, start at 21. Are you going to be going over that slowly, or is that something we should have known by now?
Oh, yeah. I'm just going through my plan on a high level.
Cool.
We have not even touched into options yet, my dude.
Okay.
Yep. All good. All good over there.
Good. All right.
So we've talked about where I'd be getting in. At this point, as long as everything lined up, I would be getting into my trade. Now, this is what I always do. I always go through this because it helps me. Remember, there are no expectations on the outcome of the trade. There are no profit targets. I just have a plan to get out when one of my exit signals happen. One of these will happen. It is a mathematical fact. One of these things will happen. I will get out when something happens. Elsewise, I don't need to do anything. So we can go through my exit signals here. There's quite a few, right? We had all these reasons to get into a trade, and it has to meet all of them. Now, I just need one reason to get out, and I'm out. One reason to get out, and I'm out of there, right? Our goal, we've talked about this before, is to reduce risk. So that is why I say if one of these happens, I'm out. So the 10 EMA being broken, that would be a trailing stop. Trailing stop meaning that it's following behind you. A close under here like it did on Tesla, that is a red light to me. That is where I will be getting out. You couldn't get me to buy anything if it closed under the 10 EMA and it drops down. That was my trailing stop. Remember, trailing stop follows behind you. A stop loss is a little different. So it's a half ATR from entry. We talked about ATR in the past. So what we're looking for is, let's say that we got in on this spot here, just for example. Actually, let's do it right here, the close of that candle. And let's say we put our half ATR line down here. Our half ATR protects us if it goes the opposite direction. But if we leave it and we say we're not going to get out until it hits that half ATR stop point, look at all the gains we gave up. Look at all the gains we gave up. We just round tripped it. What was the point of even putting on the trade? So your trailing stop is there and it's one spot. Your trailing stop moves along with you. Your stop loss is there and it is one stop, and its objective is to make sure you don't lose any more than you have risked for. So that's what these two are. Now, outlier blocks / order blocks. Let's go to, what was that when we were on? CFG. All right, looking at this might be an area that's really hard to overcome for this stock. This order block area. So if it runs up into the order block, I want to get out. I don't know how long it's going to take to find out, right? So like right here, it gapped up bigly up into this order block. It couldn't do it. It tried and couldn't do it and got monkey hammered back down. Now it's trying it again. Will it push through? I don't know. But I'm not going to stick around and find out either. If I got in here and it hit that order block, that's an exit signal to me. Outlier heat map stalls. So let's go to a heat map on CFG.
Chris, on that half ATR, the only time you move that is when you're rolling, correct?
Correct. In fact, Larry Height and I talked about that specifically. He said, if you get into a trade, you are never allowed to move your stop loss down, right? You're never allowed to. I was really guilty of this. And I think a lot of people are too, where it's not working out and you're like, that's okay, I'll give it another $1. That's okay, I'll give it another 50 cents. That's okay, I'll give it another day. And you just justified all of this losing trade that you could have had when all you had to do was stick to your plan. That was a big one for me, a huge one for me. Let's go back to the heat map stalling. That is this value right here. If the fear and greed is no longer getting more greedy when you're going long or more fearful when you're going short, I'm out. You can't make me stay in with it. It doesn't mean that it's going to immediately crash, but it means that the momentum that I want to see has already run out. I'm out of here.
Hey, Chris.
Yes.
On the ATR, moving it up with on the roll, you're rolling it. You're moving that half ATR from the price that you rolled it. Is that right?
So let's look at Datadog as an example. I would have started with the half ATR somewhere down here, right?
Yeah.
And then when I rolled it right here, I moved my half ATR up again to a half ATR below the rolling value.
Okay.
And then if I roll it a second time, I'm going to move it up a second time, right? Our objective by doing that is to keep those profits.
Okay.
We don't want them to turn around and go against us. In fact, that's one of Mark's rules. Let me pull up that slide real quick. That's one of Mark's rules is do not let a good sized gain turn into a loss. Here.
Okay.
Never let a good sized gain turn into a loss. We don't want to do that. So we want to be extra careful, extra protective on those gains.
Chris, what's the most times you've ever rolled an option?
Probably three. I mean, by that point, like it's getting a lot more volatile. The moves are getting bigger, while the swings are getting wilder. And then it's like, I don't need to be a part of this anymore. I got what I needed. I'm going to get out of here. But honestly, Paul, you could find something and just roll it and roll it and roll it and roll it and roll it if it works for you. And we'll talk all about rolling later. But honestly, the old adage is cut your winners or cut your losers short and let your winners run. My adage is cut your losers short and let your winners run out of control. Okay. If they're running out of control, you're winning like crazy. That's the objective at the end of the day. Joe, did you have something on your mind?
Yeah. Number 4, outlier heat map stalls. That's only the stock fear and greed, right? Not the sector fear and greed.
Yeah, that's all I'm looking for is the stock. Yeah. Now, a couple other things. Outlier sell signal. Of course, that's pretty self-explanatory. Or gap and crap. Now, let's look at a gap and go in AT&T versus a gap and crap. This right here is a gap and go. I love this example because it gapped up to this point was the bottom of the candle. So gap up after earnings. It never closed under there and just rocketed, right? So the low of that candle was 23.31. It just went gangbusters all the way up to $27, right? A huge move on this stock here. Not once did it close under there. So I'm not scared of gaps. I'm not scared of gaps at all, but I know where my risk is at. If it's either the half ATR or the trailing stop or the gap and crap in this case, which would be under there. Let's show you a gap and crap that didn't work out, right? Celsius right here. It gapped up, and the bottom of this candle right here was your warning sign. If it closes underneath there, gap and crap. Now, it went on to do other stuff later, but this keeps our risk in check as it's falling after the gap. So that's why it's on there as well. That's actually a recent addition. That's something that I had mentally had in my plan, but not written down. So that's something I added. Now, a couple other things you'll notice here is that these are all apply to everything. But if I'm going along, I look at the heat map spread over here. Now, the heat map spread means something like, let me zoom in. If I got a buy signal today, the heat map value is at 53.69. So I would say, okay, 53.69, I'll put a 10-point spread on there. So I would get out at 63. Get in at 53, get out at 63. We've talked in the past about the further it goes one direction or another, the more likely it is to snap back. Let's see if we got any good examples on here. Like up here, got around 80 or so, went sideways, yet it continued to get more and more greedy. Sell signal came, it started to go down hard and fast. Look how far it fell. Around $47 to $39. Just a huge straight, it was like a 20% move down just that fast. And then down here, it got to around 28 or so, and then snapped back the other direction. So it doesn't mean it's going to crash one way or the other, but it's more likely to snap back the further it goes. So I try and keep that range tight. I want to make my money and get out, right? I want to get the 80% in the middle. I'm not trying to hit the top 10 or the bottom 10. I just want the 80% in the middle. So looking at my plan here, I know something's going to happen. I don't know what. I don't know when, but I know one of these things will happen, and that's where I'm going to get out. Go ahead, JC.
When you're gap and go or gap and crap, are you moving your half ATR along with where you're at?
Good question. The half ATR stays put. The half ATR never moves. Huh. So let's go to AT&T again. Let's say that we got in at the bot or at the top of this candle.
Right.
Say we got in at the top of this candle, and let's say our ATR is down here, whatever. The ATR does not move. The stop loss is fixed, doesn't move. But the trailing stop, for me, that's the 10 EMA. The trailing stop moves along with you. And you can see, right, how useful that is to know if the trade is not working anymore, right? It goes and goes and goes and goes and goes and goes. And then boom, only right here, you see that point where it's no longer working. That is so powerful.
So your 10 EMA is your stop loss, basically. You're trailing.
Well, two different terms. Let's work on the definition of those two terms. Stop loss, meaning I'm not losing anymore, right? This is where I've said I will stop losing money.
Got it. Okay, got
Trailing stop means it's come along with me, and then I'm going to know when it closes under there that I need to stop the trade.
Got it.
Good questions, my friend. I love it. Okay. And then a couple other things that I put in here, right? Because these are different things that I've come across. The longer that I've been trading, the more rules I add to know where I'm going right or where I'm going wrong. So at each profitable ATR, we talked about rolling. This is my steps for rolling, right? Making sure I can roll for a credit, how to do it as one order. And the reason I do it is it takes partial profits now, frees up capital, and keeps the trade alive. And then moving up that half ATR point, like we talked about a minute ago. Don't worry about the details on this just yet. We'll get there. But this is what I would do in a winning trade. Now, if I'm coming up to expiration of the options, I need to know what to do too. It's pretty much the same thing as rolling. Can I roll out for a credit? If not, go ahead and close the trade. Same thing here. And then leading into earnings, I don't want to trade earnings. Earnings are so gambly to me, and I don't gamble. I take leveraged investments. If the investments don't work out, that's fine, but I'm not gambling anything. My criteria is, am I already profitable in the trade? If I'm not, I'm just going to close it now. There's no reason to hold it. If yes, it is profitable, does the expected move break the trend line? We'll talk about the expected moves later on, but you can calculate that using options, and it's really cool. And the trend line is generally the 10 EMA that I'm following. If it won't break that, then I'll hold it through earnings, right? Because it seems like a low risk play. However, if I'm already losing money, I don't want to hold it. If the expected move is going to break through where my trailing stop that we just talked about, if my trailing stop is going to be broken by that expected move, I don't need to be in it anyway. So that's why I've created this rule for myself. Now, 2 more slides. Like, all of this is my plan. Right? I know whatever circumstance comes along, I know what to do. If price moves past the planned exit point at the close, planned exit point could be your trailing stop, it could be your half ATR, it could be anything listed as an exit point that you planned ahead of time. That's why I call it the planned exit point. If it moves past that point at the close, meaning, let's say I'm trading at 2:30 Central Time, and I want to get out at $100.15, but it's trading right now at 120. I'm like, okay, cool. It's not gonna breach my stop loss, not gonna breach my trailing stop. That's fine. I'll keep it on. But in the last 15 minutes of the day, it closes under there. It closes from 120 down to 110, which is below my planned exit point. So I should have taken that exit, but I didn't see it because I already moved on. The following day, I set an alert to close in. This is my one time, well, actually 2. I have 2 emergency exits during the day. This is if it closes, I set an alert to close the trade in the middle of the day if it moves below the low of the previous day. So for example, let's say that I set an alert here, okay? Let's say that on that green line is where my alert would be. And then you know what? Oof, the next day it opened way down. I got to get out. That is an emergency exit. It moved below where I said I would get out on that day. And then this happened. Oh man, this is not going good. I got to get out of the way. And my other emergency exit during the day is day trading order blocks. So I like to have this graphic on here because I mentioned earlier getting out when it hits an order block. Well, what time do you get out of the order block, right? Because it could actually run all day. Like, for example, this one on the left over here, it could literally run all day long, or it might hit that order block and immediately get rejected. So if the stock has an order block in the direction of the trend that I'm using, close at the end of the day, or day trade out of it using the 5-minute chart. And I wait for the 10 EMA to cross under the 20 EMA on the 5-minute chart. You can see the crossover right here versus no crossover over here. See no crossover here. So we could hold that all day long and take all those profits, or it bounces up, comes back down. We got to get out. We don't know what's going to happen. We're going to get out of the way. So this is my trading plan. I know what I want to do. I'm not stressed. That's why I can put on big money. That's how I can make big money. And I don't worry about it because I have a plan for anything that could happen. And it's been refined and it's been tweaked from all these different times I've taken trades to make it even better to fit in my personality. What's up, Joe?
On slide 33, I think it was, the expected move.
Yes.
Yeah, that red circle. Do you think there's a video in your library that talks about that? Because I don't know that I've seen that since joining the team.
Joe, of course there's a video talking about it.
I mean, there's 2,100 of them, right?
2,100 videos, Joe. Do you really think I know which video is going to show the expected move? Oh my gosh, hang on. I'll just
calculate it for us once. Something about the difference between a put and a call and some sort of higher math.
So, I mean, yeah, just buy a couple puts, buy a couple calls. That should be good. No, I got you.
One call, one put at the money.
Oh, I heard somebody. I think that was deep thought.
Yeah.
Of course it was.
Dude,
He's
deep thought on it. He's really smart. I like this. All right, here we go. Let's say that the expected move, let's go to, I don't care, just Tesla. So here's the cool thing. You can actually do the expected move on any time frame you want. But when you're trading earnings, you're really looking at the one right after earnings. So we would go to this one here if we were in this situation. What you would do is you would price out buying an at-the-money straddle. So you would buy an at-the-money call. You don't buy them, you're pricing it out. So you'd hit the ask on the at-the-money call and the at-the-money put. And your price would be $17.90. So that's $17.90 up or $17.90 down. So $17 up or $17 down. Right. I'm just drawing some lines here to illustrate. So it could be anywhere between these 2 points. That's what the expected move is. Now, to take it one step further, you take that 1790 and you multiply by 85% of it. So 17.90 times 0.85. And the reason being is that the market makers they're overinflating the price of this to just make sure that when the options happen, they're not going to get hosed. So generally, the expected move is 85% of the at the money straddle price. Well, there you go. Now we calculated it. That's way beyond the scope of this class here, Joe. Thanks very much. But we're running out of time. I got to head out to Boy Scout camp here in a minute. So let's go through some of y'all's plans. Right? Let's go through your plans. So Ian, Mr. Aussie Ian said he's going to start with the SPY signal, then look at the full stocks market breadth, then pick out the sectors that are positive and enter them into the screeners. I like that. One screener with Chris's settings and a second screener with tighter fear and greed settings for stocks from $5. Then look for ones with the highest back test and see if they have liquid options. Very good. At the expiration date are around 21 days with extrinsic value of 20% or less. Then run the OVTLYR 9 and record the list of date, price, fear and greed, heat map, bull list, market breadth, trend, and record each day's figures. Then look to execute the trade and draw it up on the charts. Look at that. I mean, what I like about this, Ian, is that it's concise. Like, this is one long paragraph that has pretty much all the little details that you'd be looking for. So I think this is great. Of course, what I'd like to see here is really breaking that down. All those little details, right? Maybe having a little bit more information on those little details, but you got the big details right, my dude, right? Starting with the market, letting the market show you which direction it's going, and then filtering it down all the way until you find the ones you want to see. Sounds great. Yes, sir. Ian.
Yeah, my plan is a lot more detailed than that, but I didn't want to go into a lot of detail.
No,
good. A lot of time.
Cool. I love it.
My trades take forever to work out.
That's okay. Right? As long as it fits your personality, that's all right. You seem like a laid back, chill guy. Maybe laid back, chill trades are what you need.
Yeah, true. Thanks.
Mikey Mike. He uses the OVTLYR 9 for entry as it is. At this point, after back testing, using anywhere from a few months to 2-year-old chart data, my exits coincide with all the golden ticket exit points. However, and quite by accident, instead of watching for sector and market breadth to crossover, I exited when they both ticked down, even the tiniest bit. 4 trades in a row that got me out of the very next day and red candled me on the stocks that went into decline. So, Mike, is that a good thing or a bad thing? I'm a little confused by that.
Yeah, I got 4 trades in a row. It got me out profitable. All of them were profitable. And the very next day it started red candling. And it was, I don't know if I was just fatigued or what, but I took crossover. I looked, but it was just the drop. It was the little drop in the breadth. And I did that. I did that on all of them. And sure enough, the very next candle was red and they started going down.
Look at that.
Yeah. So that was kind of.
That's a sign of a trade, Mike, honestly, where you put it on, you take it off, and you look at it later and you're like, whoa, okay, I'm onto something here. That is what you want to see.
And that was cool because I was like, my wife doesn't care about this stuff. She's in the other room. I said, man, this is really cool. You got to see what this did. I said, I get how this works now. And then there was another one on there that, like, I usually toss the chart, once whatever the trade's done. And I just, because you have the data in front of you, I went ahead and stayed in there and got back in. And that's the one, it maybe profited again. I mean, it went down. I didn't have to hold on to it. And then I got back in. And I thought that was kind of cool and made some more money.
Dude,
so
that is great. I'm really proud of you, Mike. This is great stuff. Let's go on to, I think this is Brad's, right?
Yeah, that's fine.
All right, Brad, talk me through it.
I mean, most of my trading plan just consists of talking myself into that mindset, being sure that I'm emotionally prepared to, to trade, and just being thankful to do it, and not treating it as a, as a game or anything, but, or as a bet, it's more of get into my habit and make sure that I'm doing the right thing. And it's just checking the master key, on OVTLYR, which makes it so simple.
Unknown caller.
That's
There's
not
an
me.
unknown caller coming through.
Sorry.
That's not me. So it's really just checking the master key, seeing if it's unlocked, and if it's not, then I go on with the rest of my day. And on the non-trading days, I have things that have a positive impact. And on the trading days, testing stocks against the OVTLYR 9, making the plan, getting materials ready, and just like you said, placing the trade. Because if you talk yourself out of it, then all of your plan is basically void. So it's just getting in that mindset and then putting the trade on, and having your exit plan ready, and having your reduce your risk down. So yeah,
this is great. Oh, I love it. I feel like there's a lot more psychology listed in this one than the others, and I like that. That's really important. All right, let's go to Joe had 2 slides. So Joe, tell me about this.
Yeah, so I intend to follow the golden ticket trading strategy to a T, but since you taught us about backtesting, which a couple of weeks ago I had no idea what it was, I went back and looked at all of my losers, and they have something in common, and I intend to track this as I move forward with the strategy, that the stochastic percent K was always above 80 on my losers. And the percent K is comparing the current closing price to the highest high and lowest low over the period of time that you determine, which for me was 5 days, 5 period. So I thought, interesting. The winners, if you go to the next slide, they all, without fail, start below 80. So I have a thesis that I'm going to eventually use the golden ticket trading strategy with this additional piece in mind, that on entry day, I may find that I should not enter if the percent K value is above 80.
Interesting.
And, so that's something I'm going to be watching. But
I actually think that's pretty great, Joe. In fact, that makes me want to go test it on mine and see how that works, right? And so here's the great thing about this is that having the data right there. Now, granted, sample size is pretty small, but of course we can expand that to be a greater sample size. That can lead to something, right? And it's sometimes we got to have our little Sherlock Holmes hats going on and say, okay, does this mean something? Is there actually something to this? Or did it just happen to be randomly those 3 and those 3, right? Yeah. So I actually would love to look into this. I want to look at this with you as well. We can look at all my 24 trades and all my 25 trades so far and see where that fits. So let's work on that together. Because, dude, the last thing I want to do is increase my risk. I want to save time and start winning with less risk. Okay, that's what I want to do. And if Joe, if you've identified a way that we can tweak that, let's go. Let's make it happen. Super cool. So guys, remember, right? You want to prove that you have an edge in the market, right? But it's all theory until you actually start trading. So whenever you are working on your plan, do continue to use a Monte Carlo simulator, right? I saw, which I was very impressed by, Greg, and I don't know if Greg is here, but Greg actually built this for us. The Monte Carlo simulator inside of this YouTube link right here, which will put you right here. You put in your parameters. So let's put my 2024 numbers on here. 69% win rate, 69.39. Go like that, 69.30. And let's say 1897 average win. So let's do 1897. And average loss was 1790. And you can do this in percentage terms, whole dollars terms, whatever, it doesn't matter. And then it's going to run its simulations here, which is super cool. Exactly like that spreadsheet we saw last week, but now it's available anywhere. And this will say, even in my very worst case scenario, I would make 172 grand. In my best case scenario, 375 grand over the course of 365 trades. So I think this is super duper cool. Now, remember, you want to get your plan to where these numbers are all positive. All positive. but your plan is only theory, right? Your plan is only theory because everybody has a plan until you get punched in the mouth. If you are trying to trade and you feel some pressure and you get nervous, right? Just imagine you're getting punched in the mouth here, right? You got to follow that plan. Even when Mike Tyson's coming down and knocking all your teeth out, you got to follow that plan every single time. And sometimes it sucks. Sometimes you look in the mirror and you're like, what the frick did I do to myself? But just remember, we all are going to have losing trades. Your choice is, are you going to follow that plan or are you just going to abandon it? Mike, what's on your mind?
As far as the Monte Carlo sheet, like when I'm doing the back testing, it's just slow going. It's just for some reason going back in history. So I only had 6, it looks like, but they all showed profit in all 3 areas. But I mean, that's a really small sample. Right. So is there like
your sample size is way too small, right? You need at least 50, and that's work. Yeah. If you can get to 100, your statistical numbers are going to be way more accurate than 6. But 50 is a minimum. If you can't hit 50, keep going back. And I know it's going to be work, but you got to keep going back. So, guys, I really appreciate you today. I will put this up in the Discord. I got to run out of here real quick. We'll do more Q&A in the next couple days or so. So if you have questions, please submit those to me. And I apologize that I got to get out of here. But of course, I got to pull dad duty today. So you guys are awesome. Really proud of everything you're doing. We're getting better week after week after week, right? A little virtual fist bump. I'll see you guys all here tomorrow morning. We'll talk soon.
Thanks.
There's money to be made as long as you are smart. Know where you get it and where you get out. Read charts and follow your own plan. Don't listen to jokers, don't fall for scams. Cash for setup and read market charts. Going to cash is a trade, it's not just you or out. Check in with your key at the very start. No expectations on the trade, just execute.